Good afternoon. My name is Renaud Laplanche. I'm the founder and CEO of LendingClub. LendingClub is a social lending or person-to-person lending platform, meaning online platform where individual lenders can fund loan requests posted by individual borrowers. Person-to-person lending in general is an attempt at making the consumer credit markets more efficient by moving away from the current process whereby banks typically collect deposits from individual investors or individual lenders and through savings account and CDs at an average rate of about 2 to 4%, and on the other hand, extend loans to individuals at an average rate of about 12 to 14%. And that 10% spread in between is the spread that we're trying to compress through person-to-person lending by letting individuals fund loan requests posted directly by other individuals. So three things, and that's the premise of person-to-person lending in general, three things that really set LendingClub apart in this market. The first one is, which I have right here. LendingClub is a club for borrowers with good credit. We have never allowed subprime lending through the platform. And thanks to our stringent credit criteria, we have experienced a default rate since we opened the platform 18 months ago of less than 2%. So considering the credit environment, less than 2% is a very good default rate, and it's mostly due to stringent credit criteria that led us to only approve about 14% of all the requests we get through the site, and so reject 86% of the requests. The second thing that sets LendingClub apart is the fact that we are the only social lending platform to be registered with the SEC. And we actually completed the registration a few days ago, and we believe that's a major step for LendingClub and for social lending in general, because it will sort of give more comfort to lenders and establish the space as a more credible investment alternative. The third thing that sets us apart, and we're going to go in more detail in the second half of the demo, is a direct consequence of that SEC registration. We were able to set up a secondary market for the loans and create a note trading platform whereby lenders can, after they fund initial borrower loans, can divest those loans and get liquidity for their investment. And we believe it's a very big deal because as far as we know, it's the first time in the world, or at least in this country, that retail investors have access to a trading platform whereby they can trade consumer debt. And in the current environment, this will help drive liquidity to the consumer debt market, and that's certainly a good thing. So going directly into the demo, there'll be two parts. The first is really the primary market, LendingClub website. The second part is going to be a more in-depth dive into the trading platform. So what you get here is a typical sort of lender account. Sorry, close that. It's a typical lender account where you can review sort of the composition of your investment. Loans are graded from A to G based on the risk involved. You can review sort of the average interest rate you've invested in and expecting monthly payment on those rates. There are several ways to invest in loans. One is to pick loans sort of one at a time. The other is to use a software called Lending Match that really helps lenders invest in a large number of notes at one time by setting some preferences. For example, here I can set different interest rate preferences, and I can see some of the risk involved that varies based on my desired interest rate, and a sample portfolio composition that will include different class of loans depending on my target interest rate. And the process is very simple. I set up this preference, click on next, get a list of notes I can invest in, and each note represents a fraction of a borrower loan. So a loan request can be, say, $10,000. I'm going to only take, say, a $500 portion of that loan request. I have here my portfolio composition. I have 30 5 loans I can invest in. I can review the details, or I can go right in. I'm happy with that composition. I click next. And if I submit my order here, I would have partially funded 35 different borrowers in less than 20 seconds. What happens is, after I've done that, let's say I've invested with $16,000, and I need sort of $600 back. I invested too much, I need some liquidity. I'm going to go to this note trading platform that I mentioned earlier. Trading platform is operating by FolioFN, our partner, which is a registered broker-dealer, and basically settles the trades on the trading platform. So I can browse the different notes for sale on the trading platform, or here in my case, I want to sell some of the notes I have in my portfolio. Some of the notes I just acquired. Here I have all the loans, all the notes that I purchased in my portfolio, and I can look at every single one of them and decide based on the credit score trend of the borrower, if it went up or down, or based on the status of the loan, based on the yield to maturity on that loan, decide to pick any of those loans and say these two, put them up for sale on the trading platform, and set a price for those loans. And a possible price would be outstanding principal plus accrued interest since the last payment date. I would go on with that price, click next, and I would have put those two notes up for sale, and on the other end, a borrower, a buyer, potential buyer, would come in, browse the different notes that are up for sale on the platform, and will make the purchase decision. So we believe this is a great development in the sense that it's the first time really retail investors have access to that type of tool that lets them trade consumer debt. Thank you.